All right, so hi there. I'm Jason Yarusi of Yarusi Holdings. We're a multifamily investment firm here just south of Nashville, Tennessee. Since 2016, we've acquired over 18 multifamily properties valued a little over $180 million. It's been about 1,600 units that we've acquired in the course of our process. So some of this and a lot of these we have acquired using syndication. That's where we pool our capital with our investors' capital to be able to go out there and buy larger assets so we can all benefit from the economies of scale of having a larger property. Now, how have we done this? How have we raised millions and millions of dollars? We just raised $3 million last week to be able to go out there and buy these assets. Well, it first started with creating a routine, creating a process to put ourselves in the best position to have access to this capital. So what we did is that when we knew we wanted to go on this journey, someone made a great suggestion for us that we didn't have a deal yet. So how were we going to raise money if we didn't have a deal? Well, we created a mock deal. And this was a mock deal of the type of investment that we were going to be looking for. And then we created a chart of everybody we can think of. Everyone we can think of that we know that may be worth a conversation to talk about investing. We could go through our contacts on our phone. We can go through a Facebook page. We can go through our email list. We created that list and then we started reaching out to people, talking to them with a quick one-liner. Hey, we are investing in multifamily properties. This is why we like multifamily properties. We'd love to schedule a call with you to learn more about what you're investing in. From there, we had a number of calls. And we did this is that we got on the call and we asked the investor if they've invested in multifamily before. Because for us, there's 5 steps of this that were very beneficial. We got on there and talked about us. A lot of them already knew us, so they knew our track record. But we were in a different space before, so we were coming from a different space. We had success in the real estate industry, the construction industry, the bar and brewery industry, and now here we are buying large real estate. So we had to explain how and why we were doing this into the multifamily space. Then we talked about multifamily itself, why it was such a great asset class that we're really behind, right? And then past that, we talked about the standard type of investments that we were looking for, why we were looking for them, what location we were investing in and why, and then how the return structures worked. Next, we would ask them, what are they looking for in the investment? What was important to them? What would stand out? What kind of investments really would be beneficial to them? Because they could benefit from cash flow, appreciation, depreciation, tax benefits, debt pay down, diversification, right? There's so many different ways for them to benefit. And from there, we would leave that conversation to see if there was interest. And if there was interest, we would gauge that interest. They would be looking to invest $25,000, $50,000, $100,000. And throughout those calls, we started to build a list of potential investors who would be interested when we had an opportunity, like our mock deal, to come back and invest with us. And that gave us confidence that once we had on paper interest for about $1 million, that we could go out there and find an asset that is about $3 million. Rough math is that any value of the property that is your purchase price, you may have to raise about 35% of that. So we said, okay, $1 million can get us just roughly around a $3 million property. So as we started to get out there and engage and offer on properties, we now knew as a backdrop that we could have access to capital to do so. So our first deal that was $2.3 million in Louisville, Kentucky back in 2016, when we got that deal under contract, we were able to go back to that list of investors and raise that $700,000+ within a matter of a day. Why did that happen? Because we didn't need to ask for the money at the time. We were already qualified ourselves. We had already qualified the investments. We had already qualified the investor to understand what was going to work for them and see if they would be a fit for the projects that we were looking at. So that allowed us to get very active very quickly, to take action, to raise a ton of capital. We used that process throughout to continue to build our investor list, to continue to get out there and get great responses from investors. So when we do come in front of opportunities, we're able to raise that capital quickly. Now, there's that common thing that is said that if you find a deal, the money will follow. Well, sure, that can be true, but do you have time for that to happen? And I don't want to be in a position that I need the investors' money, that I need their money. I want to be able to offer great opportunities. I don't want to be under the pressure that I haven't done the work beforehand and now I have to go out there and ask because I need their money. I want to give them the chance to be in front of these great opportunities that we bring them so they can make a great decision, not only for themselves, but for their investing future as well. All right, so that is how we raise money for syndications from private investors, from our retail investors. Again, if you like what you hear, go down there and hit that like and subscribe button. Give us a follow so you are alerted when more of this comes up. And we'd love to hear back from you. Hit us out there with those reviews, those comments. Give us your feedback so we are ahead of what you're actually thinking, what else we could do to give you more benefit here in the multifamily space. And again, I am Jason Yarusi of Yarusi Holdings. Thank you so much for joining us. Let's do this.